I always worry right about this time after earnings here in the U.S. because we go from basically focusing on the micro to the macro, and then you focus on what's happening with the trade wars. You start thinking about other things that really don't affect earnings as directly, or they haven't so far here in the U.S. So from that perspective, I love earnings season. It brings us back to it. Once you're past it, unfortunately, then we start looking around to see what's
So
next.
we look at all the headline risk. We look at the trade wars, Ryan, and is that noise, or is that stuff that people should be paying attention to?
There's a trade war going on? I didn't realize. Yeah, that's all we can seem to talk about right now is trade wars, trade wars, trade wars. And I think that's probably putting a little bit of weight on the market. But Andres was saying about fundamentals. I think the one thing is in a bull market is the surprise are always in the positive. And I think what we've seen so far is we keep getting surprised with good news. And I think that's probably going to continue. So if I'm an investor right now, my biggest concern always is some sort of melt up because the news is just going to keep coming in better and better.
Wait a second. You think the market's under pressure right now because we keep getting new highs for many of the major averages? Dow Transport's earlier this week.
Good point, Becky. But what we have to remember is valuations are actually cheaper now than they were at the beginning of the year. So the market's at a higher price, but because earnings were so good this last quarter, the valuation on the market right now is even cheaper. So I'd argue the valuation on the market would be a lot higher right now if we get past these trade wars.
We had, go ahead.
Yeah, one thing that I wanted to mention is that even though trade wars are not affecting as much earnings here, they're definitely affecting it abroad. So from that perspective, I try to kind of separate the politics from what's happening in the markets, but internationally, unfortunately, they can't do that right now because trade is such an important part of economies, for instance, like China versus the U.S.
Meaning what? The U.S. market is even better place to be relative to other markets?
Well, I mean, you could see the distinction. I'll tell you a crazy stat. So over the last 7 years, the S&P 500 in total returns has given you 173% returns. EM, during the whole 7 years, has given you 14% returns.
Wow.
So that divergence only continues to get worse with this trade wars discussion.
But that's also the reason we have a lot of people saying this is no longer going to be a place where you can just throw your money in the S&P 500 and see big returns come back. That's over, that it's really time to start picking stocks. What do you say to that?
Well, that's my view is from an asset allocation standpoint, international, especially emerging markets, look more appealing. Like that sounds crazy because I just mentioned this trade wars are affecting them worse. Having said that, valuations from a relative standpoint, I'll throw you another stat. The S&P 500, when you look at CAPE ratios, which are cyclically adjusted PEs, have only been cheaper 3% of the time. Expensive, right? For EM, they've been expensive only 3% of the time, right? So EM basically is close to the bottom when it comes to valuation.
Yeah.
S&P is close to the top when you use CAPEs. You might use other metrics that don't look as appealing.